I'm Bob Burnett, and this is Mind Your Business. I'm a Bitcoin evangelist, a technologist, a former C-suite executive for Gateway, a Fortune 500 company and one of the largest PC companies in the world in the 90s and 2000s. I'm also the founder of Barefoot Mining, a Bitcoin mining company. On Mind Your Business, I'll be having conversations with some of the brightest and most innovative people across the whole Bitcoin ecosystem. And we'll be exploring and contrasting unique perspectives on Bitcoin, economics, business, and life. Today, I welcome James Lavish as the inaugural guest on Mind Your Business. James brings a history as a reformed hedge fund manager, as he likes to call himself, a CFA, and he combines that with an educational background in art and politics, and an athletic career that stopped just short of the NHL. This gives James a very unique and valuable perspective on Bitcoin and the fiat financial system. James is an important and emerging voice in the Bitcoin world, so now let's drop in on my conversation with James.
Got it.
All right. Well,
I've consented to be recorded. You should know Bitcoiners hate to give consent on anything. Right?
I know. Well, I'm surprised you tell me your name, your real name.
Right? I know there's so many anons. I can't figure it out.
I know.
I have people come up to me at the conferences. They're like, Bitcoin Gandalf. I'm like, okay, what's your real name?
I know. I've had the same experience, and I respect however anybody wants to approach this. It's certainly their prerogative, but I think some of us have to be real faces and real names, and go out and talk with the world, and and actually maybe that's a good segue. I mean, we're kind of just here having a conversation, and I appreciate you, James, joining me today. This is the inaugural version of a new podcast called Mind Your Business, and there's a lot of podcasts out there, and you could argue the last thing the world needs is another podcast.
Well, I'm honored to be the inaugural guest. So,
but hopefully we can add something a little.
I'm a good test subject. It works out well.
Yeah. Well, I've wanted to have a conversation with you for a very long time, and I've seen you at different conferences. I think we said hi a few times, but never really had that chance to connect. And I said, well, this is a great chance. And one of the reasons I wanted to do that was that, I think we're roughly peers in terms of our ages, and Absolutely. We've arrived at this same spot. And you took one professional path, and I took a different professional path. You through the world of finance and Wall Street and all that sort of stuff, and I took a path through technology and the Fortune 500 corporate world, and here we are. We got to the same spot, and
there's a lot of overlap.
Yeah,
there's a lot of overlap.
Yeah, and I think that bodes well for Bitcoin, that people can reach a similar conclusion following different logic paths. It's kind of like, I know we both, one thing we would share, I'm an engineer, and I know you're going to come from a world where math is very important. Foss always talks about how important math is, right?
The most important thing, it's religion.
Yeah.
Math is Foss's religion.
Yes, it is. And I guess to a certain degree for me too. And when you're doing math problems, sometimes when you get the same answer using two different methods, that's when you really get kind of excited. I got it right.
We have a proof.
We have a proof. Yeah. And so I think it's kind of that same thing when people come through different paths, and they've looked through some different optics, and then they're at the same place with the same vigilance and the same, conviction.
No doubt.
That's a pretty exciting thing. So
definitely.
Yeah. So I'm curious. So, as I said, this is really the first time James and I have had a chance to talk. And so, I'm curious just a little bit, like where'd you grow up, James? And, what was your life like when you were a kid? And kind of
absolutely.
Where'd you come from?
All right. So I'm actually from upstate New York. So I'm sitting in Las Vegas. People know me as a West Coaster. I was in Texas for a long time. And but I grew up in a little town north of Albany in New York, and I was a hockey player. And so you may have heard some of this, but I played hockey all the way through childhood and up into college. I was playing hockey for Yale, and I'll give you my whole journey
Yeah, I'd love to hear it.
the Bitcoin, and just interrupt me if it becomes a monologue. But
Okay.
but I can talk forever, right?
Yes.
So I was playing hockey, and I was pretty good. I was really good, and I was doing very well. I was at the height of my career, hitting on all cylinders, and I had been drafted by the Boston Bruins.
Oh, awesome.
I was on the U.S. national team, which is kind of a bigger group that they select the U.S. Olympic team from. So I was traveling around playing tournaments with them. And at the end of my career at Yale, my senior year, you can't have an agent or you can't really negotiate yet, but I knew I was going to get signed by the Bruins. It was in the Boston Globe that they were going to sign 2 players, and I was one of them. And I mean, I was flying high, man. I was on top of the world.
Yeah.
And we're playing in a game in senior year, and as it happens, it's just against St. Lawrence, just a conference game, no big deal. And I'm getting a breakout pass from my defenseman in my zone, and I take one step forward. My left foot goes into a groove in the ice, and my edge catches in there, and I get hit right at the same time on my knee, and it pops. And that was it. It was over in a heartbeat, Bob. It was over faster than I could even imagine. And so, yeah, I mean, it's a pretty devastating thing to be 21 years old. You think you're on this life path, but a life lesson, and it's over in just an instant. And so I had student loans, and I had credit card debt, and I was planning on just paying all those off because I was coming out, I was going to get signed. Life is good. And nope. So I did what you do if you're a Yale grad and you don't know exactly what you're going to do. At the time, it was 1993. You remember 1994.
Sure.
There were not a lot of jobs to be had in this nation, and so. Yeah. I mean, I looked around everywhere, tried to stay in Boston. What had happened is I loved Boston, but after I got hurt, I got picked up by New York. And so and I tried out with the New York Rangers. They went on to win the Stanley Cup without me. I mean, I just wasn't there. I had to be like 125% of what I was and in college, and I was operating about 70 or 80%. So it was just not going to happen. So I tried.
Sorry.
But it's
what a ride, right? Though.
It was a ride. It was so much fun. I mean, still think back to those days, of just being on the ice with the crowd, and it was a lot of fun.
Yeah.
So
well, I get that. I was an athlete too, never at the level that you were. But that rush.
Yeah. I mean, it's the same. It doesn't matter.
And
I mean, to make that point, that rush of being in front of the crowd and all that was a lot. But I still remember being a kid and playing in some of those tournaments as just a 10 or 12-year-old, and just how intense it was and how big it was to us. And it's the same rush. It's actually a little bit less nervy because you're not in front of all these people, you're not playing in front of 10, 15,000 people, but it's the same rush. And it's that same, so it's not anybody who's played these sports and you really are dedicated to it. I mean, you don't have to play at the professional level to feel it. It's right. And in some ways, by the time you get to the pros, it becomes something that's more of a business, and it's like you lose some of that. So anyways, go ahead.
Yeah, no.
So you can't belittle it. It's a big deal.
No, it is. I mean, I still remember, like you're talking about 12 years old. I remember winning the city championship in Little League at 12 years old.
Oh man,
the rush of
and world champions.
Yeah. I mean, champions. Yeah, it was 1976. By the way, I'm just a little older than you. 12 years old, bicentennial year in the U.S., which was a big deal.
Yeah, big deal.
I mean, what seemed like thousands of people, but was probably 150 people at the field, watching. My grandpa was there. I had a great relationship with my grandpa, who's passed away, but he was there. I remember him sitting right behind the bench, and I was the lead. I remember I was the leadoff batter. So that championship game, strolling up to the plate to be the first batter, the first pitch coming at me, and that was just like, yeah,
that's a rush.
I think to a certain degree we crave that same thing, and some of that comes from Bitcoin. I get, I occasionally taste it. My wife, I don't know if you got to meet, we were at a party together that Larry Lepard. I don't know if you got a chance to meet my wife, but
very briefly, but yes.
But she's still she's 51, but she's a competitive bodybuilder, and she's competed at a high level. She's competes for national championships and North American championships. And so I get a little of that through her still, when she goes on stage.
Sure. Yeah.
She does that. And
that's fun,
and that's fun. But, what I also think, not that we're just going to sit here and let people hear about our athletic accolades, but I was also a gymnast. And so I played all the traditional things, but I was a gymnast, that's crazy. Which is a little unusual, right? And it's more of an individual sport than a team sport. And while I did not have a chance to participate in college at the same level you did, although I did have a chance. But I remember blowing my chance to compete at maybe a Division I level. And so
that's so hard.
And it was a mental error. It was a mental error. And the mental error was I was an okay gymnast, but I was really good at pommel horse. And in men's gymnastics, there's 6 events. And pommel horse is the odd duck. And so what you have is you have a lot of all-around specialists, a lot of all-around athletes. But on every team, even the best teams, they'll have a couple pommel horse specialists. Okay. And I was good enough that maybe a University of Wisconsin or an Iowa or somebody like that.
Yeah.
If I'm at the top of my game, I could have been that.
Sure. One. Yeah.
So anyway, I'm in the sectionals to qualify for the Wisconsin State Championship, and probably have the strongest record and strongest routine. And what I would do in my routine is I had front loaded the difficulty. So I'm going to be up there it's a quick thing, right? Like 60 seconds. Yeah. I throw all the difficult stuff that was physically strenuous in the first 30 seconds. And then the next 30 seconds are supposed to be just like a breeze, right?
Yeah.
So I get through the first 30 seconds perfectly. I nailed it. And I remember to this day in my head, stopping my focus and saying, I got through the hard part. And the next thing I know, I'm laying on my back on the mat and I had fallen off of the horse. I still don't even know what happened. My mind
but you know what? Life lesson, man.
Oh yeah. Yeah.
Life lesson. It's a good, of course I want to have played college hockey if I had to do it all over again, sure. But it doesn't define me, and that's that's another life lesson. And that's great that it's terrible that happened to you, but you can learn from that. You can learn so much from these things. And it's brutal. Yeah. I bet you still dream about it, right?
I can still in my head, if I close my eyes, this would have been 40 years ago now. I turned 58 yesterday, by the way. So 40 years ago. I can close my eyes. I can do the whole routine in my head. I could no longer execute it physically, but I can do the whole routine in my head. And I can tell you that exact moment, boom, my hand's supposed to be here.
Yeah.
It doesn't get there and I'm off balance. And then, boom.
Oh man, that's so hard. That's so hard.
Yeah.
That's so hard. So I'm sorry to hear that, but
what's interesting, probably to steer it back to where some people might find it more interesting is, one of the things I was curious about was how you ended up doing what you do, because, for me, what I can tell you is I knew I wasn't going to be a professional athlete. That would be different from you. Cause even in gymnastics, there's nowhere to go.
That's it.
So I remember, again, being a product of born in 1964, I remember the moonshot. I remember men going to the moon. I remember in the early 70s, they would wheel in these TVs into my grade school classroom, and they would do the Apollo launches and all that. Like they would stop classes.
Yeah. Yeah. Sure.
And that just inspired me so much to want to be an engineer, to, I mean, at that point, to go into the stars, and start reading science fiction books, Jules Verne books, 20,000 Leagues Under the Sea and all that, and, I'm in large part here today. And I don't know how much you know about my background. Ultimately, I came through the personal computer industry, and I was a chief technology officer at Gateway, the old personal computer company.
Yeah, so sure.
I spent my career, designing technology and doing those sort of things. And I know that path. I can follow that path. Yeah. From basically the moon launches in 1969 and 1970 to sitting
today,
here today.
Yeah.
So, I was curious about your path. So I think obviously you had to take a hard right turn when you blew your knee out, right? That changed.
Well, I got completely knocked off kilter. I didn't, and at the time, hockey was my identity. I mean, I was at Yale and I was studying, and there are no athletic scholarships at the Ivy League schools. So, as you know, and so I was saddled with debt, and I was not sure, what I was going to do. I didn't really have a backup plan except one thing. I had one backup plan. The backup plan, I was going to go to law school for 2 years, or you go to law school for 3 years, and then I was going to go to the FBI. And that was my backup plan. Yeah. And, but I wanted to be a field agent, and I just blown out my knee, and I was like, I don't think I can do the tests. And I would have to go through surgery and rehab. And I was like, you know what, I got to pay off my loans. I've got to focus on this. So my backup plan kind of disintegrated. And, I'm sure I could have if I went back to it, but I wasn't. My knee was so bad that I knew that I was going to be completely reconstructed, and I wasn't sure if that was going to knock me out of being an agent. I mean, we all saw that the movie with Keanu Reeves, and he's the FBI agent. What's that movie called? God, Point Break.
Oh, okay.
And yeah. So, and he's got his knee problem. So, anyway, I wasn't sure what I was going to do. So I did what you do as a Yale liberal arts degree holding Yale grad. And I went to the city, and I started talking to people who had been athletes, who had studied history, who had studied political science. And like, I was a political science major, and and I started sleeping on friends' sofas, and I didn't know what I was going to do. And one of my friends like, I remember you were really good in math, so why don't you come see what I do? I was like, all right. So he brought me to he actually set me up with his dad, and they were trading. They were institutional traders on Wall Street, and on a floor in a high rise, and on a trading floor with all the hundreds or thousands of desks in front of him. And they were on their phones yelling back and forth. It was super high energy, and it was quick thinking, and it was, intense and pretty, not just intense in the energy, but the risk and it was, so it was high pressure, and so I was talking to him. He's like, look, you played at the highest level of hockey before pros, and you've been under this pressure in front of the crowd. You've had to deal with this stuff. You have to think on your feet quickly. I think you'd be good at this. So I talked to a number of people. I wound up getting hired to trade on the floor of the New York Stock Exchange. So I was a trainee, and I ended up on the floor through a confluence of events at SG Warburg. And so I'm on the floor of the New York Stock Exchange, and I wind up after they had had a merger with SBC, and they had layoffs, and I got laid off, got rehired. And then I'm after a few months, I'm standing in front of a booth all by myself, trading on the floor of the New York Stock Exchange, something called ADR arbitrage, where you take foreign shares and trade them on the New York Stock Exchange. You translate them with the currency and a basket and stamp tax and all that. But we didn't have spreadsheets, so you're only a few years older than me, so you remember, like, we did not have spreadsheets.
Oh, we didn't.
So all I had was a basic calculator, and whoever could do it the fastest on the floor got the trade and got that spread. And
I guess I never thought about that in that era. Yeah. Wow. Yeah. Wow.
So so anyway, so that kind of led me into the arbitrage world, because at the time arb was not a big thing. It had gone very quiet after the Ivan Boesky and Michael Milken days. Like it had really collapsed, and there was not a lot of activity in the hedge fund world. You still had your LBO firms, and you still had KKR and they were morphing into more private equity. And then there were these hedge funds, but they were not this big deal back then. Like they were very low on the totem pole for Wall Street. And we struggled just to get prime brokerage coverage when we had first started back in 94, 95. There was just not that much hedge fund. It wasn't like today. Let's put it that way. Anyway, and I started doing merger arbitrage, risk arbitrage. I wound up getting picked up by Travelers Group, then going to Texas with a hedge fund there that grew huge. It became enormous. One of the largest hedge funds in the world, where I was the head arbitrage trader there. And so we were moving around hundreds of millions of dollars daily, billions of dollars sometimes in super active days. I left there, I had my own firm, and interest rates went to zero. And in arbitrage, you need the risk-free rate to be.
And what time are we? What year are we in now, James?
So we're like 2002 to 2004.
Okay. Oh yeah.
Okay.
Tough period, man.
Really tough period.
On the backside of the .com bubble and all that. Yeah.
It looked like everything was recovering, and So anyway, as it happens and as it goes. But I wound up helping a colleague of mine start a private equity hedge fund. It's a hybrid fund within his office, which is it's a $26 billion firm. We had a small amount of capital in there that we grew, but I was the chief operating officer of that unit within there. And so that's what I've been doing for the last 15 years. So I've been an institutional investor. It's painful to say, but for since 1994. So if you want to do your quick math of the about 27, 28 years on it, Yeah. And so that's the thing, though. So how do I get into Bitcoin? That's probably your next question, right? I mean,
partially,
let's hear it.
I find paths like this very interesting, and maybe for another time on the show I'll go into it. But I want to share one interesting thing, that you had the FBI agent path. So I got out of college in 1986.
Yeah.
And very tough job market, by the way.
There was nothing happening.
Horrible.
In 1987, we had the crash. Awesome.
Yeah. Even better. Yeah, I remember terrified I would lose my job right after I got it. So I get out in 86, and I was a good student. I had a degree in computer engineering. It's kind of a blend of computer science and electrical engineering.
That's pretty stout back then.
Yeah. Thank you. And I was at the very forefront, and I have 2 job offers, only 2, which I would say person coming out today with my same job skills probably has 25,
Right.
And I got 2.
No doubt.
And one was with a company called Zenith Data Systems. It was a division of Zenith Electronics, which is a TV company.
Yeah. Oh yeah. Are they still around? They're still around.
LG, the Korean company, owns the brand. They don't use it much though. That's the job I took, by the way. And the other job I had an offer on was with the National Security Agency, and I would have been a spy for the National Security Agency. So,
wow.
So anyway, there's a long story that goes with it, maybe over an actual beer. I'll tell you that story.
Yeah,
It was a fascinating,
over
and
cocktails.
I always wonder, what my life would have been, because they were very different vectors. It wasn't like, oh, I was choosing between, two technology companies. Like, well, hey, you're going to go be a spy and probably be stationed in the Eastern Bloc, working in an embassy in the Eastern Bloc, and
right.
Steal codes and try to like that was what I would have had to do, or I do this. And, so I chose that path. So I find your path interesting too, because I think we both end up in such wildly different places. It's not like we would have converged on this spot necessarily. I don't think so.
No.
So was there ever a time though in that period, I guess before, we get to some of the Bitcoin stuff, was there a period where you said, this isn't for me. It's not doing it for me anymore?
Well, I mean, after I had my hedge fund, that was rough. That was a very difficult period, because when you have people relying on you. But I learned so much that that was a tough period. But even then, and I went back and I had a clean slate. I was like, all right, well, what do I want to do? Do I want to continue on this path, or what do I want to do? And so I knew I wanted to come at it a little bit differently. I didn't want to trade arbitrage anymore. I knew that much. So I had been burned out,
Yeah.
And so that high paced, super intense, high pressure, daily high pressure situation, I didn't want to do that anymore. I had finished my CFA, so I could climb out of that pure trading role. But I also, I knew that at that age, to switch careers completely, I mean, like when you're in finance, you're in institutional finance, you're making enough money. The opportunity cost to go to a different profession is pretty high. And at the time I had basically had a 3-year-old and a 1-year-old that became a 4-year-old and a 2-year-old.
Yeah.
And I was like, it would have been too much. So the short answer to your question is, yeah, I thought about it, but very briefly, because I knew that staying in this world would benefit me enough financially that it would make sense. So, and I have no regrets on that. I wish I could have had that taste of the professional hockey career, but more so, I wish I had been able to play on the Olympic team. I mean, I was in upstate New York watching the 1980 USA team beat Russia. I wasn't at that game, but I was right there, 2 hours away. So anyway, so so I super briefly had that thought, but it's a great business in a lot of ways. And being in the hedge fund world, it gave us enough flexibility and anonymity from being right there with the investment banks and in that world, that it was refreshing. We could, so, and one of the hedge funds, we come to the office in shorts and t-shirts and flip-flops, and
in that era, wow, that's
yeah.
I mean, that's fantastic.
So
part of the reason I'm asking you that is, when I left I was in the personal computer industry from 1986 to 2004. So 18, 19-year run. And, I started, my first project when I was with Zenith is what I would argue was the world's first laptop computer ever created. It's a very, very cool thing, and there's some dispute in computing history about what was the first true laptop computer, but I think I have a pretty strong case that the one we designed, and I was not the senior member of the team, awesome. but I was on the team, and it ended with, I was the chief technology officer at Gateway. I also ran Gateway International. I had 4,000 people working for me.
Wow.
I think I'm trying to remember. I think it was a $6 billion P&L I was managing. So it was very exciting. And then through a long story that ended. And, there's a dispute as to whether I quit or I got fired, but depends on who you ask. I say I quit. but I, by the way, people out there, if you ever get fired, there's, I mean, if you get fired because you were stealing something or something like that, that's not a big deal. But when you're in a C-suite of a Fortune 500 company, you're going to get fired someday. I almost promise.
You get laid off. It just happens.
Well, and a lot of it is administrative changes. It's no different than, did Biden keep any of the Trump administration people?
Yeah.
Probably plenty of them were plenty competent, but no, you're going to get fired. So if you get I was the CTO and EVP of international. Well, we had a CEO change, and he's bringing in his guys, and I get it. So anyway, so I left and I started a technology incubator. And what my wife will tell anybody is that I slowly started kind of losing my vigor. So like my aura was kind of getting, like, just, I didn't have the zest for life. And I think it's because I didn't have purpose, because much like you and your hockey and probably in some of your professional stuff, like I'm in the middle of at least what I believe to be world changing stuff. Like I'm developing the personal computers and pushing the backbone of the internet that, I was very proud. I still to this day, I'm very proud of it. And then that was gone. And I'm doing this startup, and we have a technical documentation company. We have another company that does this, another company that does that. And, some of them make money, some of them don't, some of them, it's like anything in that world. But nothing was going to change the direction of society. Nothing was going to, and so it's probably that same feeling like a professional athlete has, or the same feeling you had at that point. Like, well, my identity was over. Like my purpose, my identity was over, and maybe my purpose in life was over. Like, I mean,
certainly adjusted.
Yeah, certainly adjusted and probably downtoned. And that's, I mean, we all have ego, and but I think more importantly, like, you got to wake up every day with purpose. And part of the reason, so I'm giving back to you, is I had that experience. And so I'm just thinking like, hey, you've trudged through that career for quite a while, and I'm sure you're very good at it, but at some point, maybe it's not as challenging anymore. Maybe you don't feel the same thing. And that kind of gets me to Bitcoin a little bit too, is like, one, I'd like to know what got you into Bitcoin, but I'd also like to know, like, has Bitcoin changed you? Like you fundamentally in your purpose? Like,
sure. And that's a good question. So, my wife and I, my second wife and we lived in separate cities for about 10 years, and we went back and forth because of kids. And I was in Dallas. She was here. She would come to Dallas for a week. I'd come here for like 4 or 5 days, and then we'd just go back and forth, and I was a COO of the company, so I had some flexibility on time, and it was fine. But then COVID hits, and we go into lockdown, and we get locked down in separate cities for 100 days. And so and so that kind of broke me on my energy to go back and forth. I was like, okay, this is just too much now. My youngest was headed off to college, and my oldest was already in college. And so I packed up my car, I drove out here, and I never went back. I sold the house in Dallas. I was like, I'm done. So, and I had the conversation with my firm. I was like, look, when we'll just figure it out. And over that course of a year, I trained some people to take over my job. And so, but I wasn't really sure what I was going to do. I was like, I'll either buy a business, or maybe I'll build some sort of investment business. I'm not entirely sure, but I'm kind of looking around. But let's rewind to 2018. Okay, so that was 2020. Okay. So in 2018, I had some discretionary capital that I wanted to invest, and I wanted to go out in the risk curve, right? Because I had my money in regular equities. I had a 401k. I had public and private and some venture, and I have real estate. And I'm like, I'm kind of spread out, but I'm not. Everything's just traditional assets. I wanted to go out on the risk curve a little bit and do something just different. and Bitcoin came across my desk. And so I did something that a lot of institutional investors do mistakenly. And the first people I talked to were the technology analysts within my world.
Yeah.
And they immediately dismissed it. They just said, it's a Ponzi. There's nothing to it. There's no fundamental value. Stay away from it. Do not get involved. It's drug money. It's for trafficking children. I was like, this is 2018. I was like, all right. You're right. I don't know what I was thinking. So I invested money in something else, and which I'm still invested in because it's a venture thing. But flash forward. Now, I had been here for a number of months in Las Vegas, and I wasn't sure what I was going to do. I was having conversations with my kids. My son knows. He's like, well, what do you think you're going to do, Dad? I don't know. And he goes, I really think you ought to look back into this crypto world. A lot of my friends are really, really involved in crypto. So he's at Cornell up in New York, and got a lot of pretty tech heavy set of friends, right? And I'm like, I don't know. I talked to him. He's like, Dad, just please buy some Ethereum, check it out, tell me, and start doing research. So I did. I bought some Ethereum. I don't know, it was like 1,200, or I can't remember. Maybe it was 1,400, 1,300 bucks, whatever. Well, it rips upwards as I'm doing research. And I realized quickly, okay, I don't understand the value proposition of Ethereum. I just don't. I understand generally what the thesis is.
Yeah.
I mean, I understand what thesis is now. I'm talking about back then. I'm like, I can't get my head around this, but this Bitcoin has something that I can really bite into. I get this. I understand this.
Yeah.
And so I started doing more and more research. I moved my money into Bitcoin, and that little bit that I invested, and I'm like, okay, I'm just trying to check it out and figure out what's going on. And I'm watching Michael Saylor and some of the podcasts. I'm going about it a different way this time. I'm not going to go back to the institutional world and say, hey, what do you think about it now?
Right.
So I started doing my own research on it. And so reading some things and reading the Bitcoin standard, and I'm really understanding it now. And then I have this moment where I'm sitting on the edge of my bed, and I've got my laptop, and there's a interview between Pomp and Jeff Booth, and Jeff is talking about the deflationary versus inflationary forces, the deflationary forces of technology, which you experienced all those years, and how they're battling with the inflationary forces of the central banks, and how the central banks have to keep raising prices in order to make sure have to keep stimulating inflation to make sure that they can inflate away the prior debt. And it's just mathematics, right? And eventually they're going to clash. And it just clicked.
Yeah.
And I told my wife, I was like, come here, you guys see this. I watched the whole thing. We sat down on the edge of the bed, and she watched the whole thing with me for an hour. And she's like, how much do we own? So awesome. And I've been fortunate now. Well, let me back up. So then I really, in earnest, started getting involved in the community, the people who are really actively talking about it and putting out their research, putting out their thoughts. And so the thought leaders, I don't know. And so I get into Bitcoin, I get onto Twitter, and I start up my Twitter account, which I've had since 2009, but it was really just to help my wife because she's a novelist. And so everybody I'm following is authors, and the only people who are following me are authors. It's like basically a mothball account. I haven't really done anything with it, right? Since 2009. The great thing is I got my name, so, but anyway, so I fire that up and I start meeting these people, and lo and behold, flash forward just 6 months later, I'm having dinner with Jeff Booth at the Bitcoin conference, just getting to really dig in and understand his processes and his thought processes. So
Yeah.
it's been a crazy, amazing ride.
Yeah.
Let's just put it that way.
Well, I appreciate you sharing that. I think, one thing is interest. Actually, a couple things I think are interesting, kind of overlaps. One is the deflationary nature of technology, because, I lived that. I was, I ended up, I was at Zenith. I left. I did a startup designing a new laptop computer with a couple guys. The design of that computer, and ultimately, I guess you could say the company and me, got bought by Gateway. That's how I ended up at Gateway.
That's awesome.
In 1991. That was in 91.
Well,
and then in 93, I was part of the executive team at Gateway that took Gateway public.
Wow.
So, I've been through the process of, an IPO. We became a Fortune 200 company. We became, you might be old enough to remember this, but in the late 90s, the brand surveys of the late 90s, Gateway was one of the top 10 most recognizable and respected brands in America.
I think I owned a Gateway.
Yeah, probably in your world you probably did, because
well, at home I owned a Gateway at home. Then I ended up owning a Dell later on. But that was it.
But what we were fighting, it's interesting what we were fighting, and as I went from kind of being a designer to a manager to the executive running all the product development, I had to become kind of a really big picture person, right? So what are the implications of technology on society? How does it change? What are the implications to the corporate direction? Those are the things I'm pondering. Yeah. And it was pretty obvious, right? We're out there producing computers every year that are twice as good as the year before, and we're charging half as much. So, I was seeing deflation, right?
It's incredible.
It was, I was living it, but I, as a side note, I also have a degree in economics, by the way, but I didn't do anything with it the first, but then in 2002, on the heels of the dot-com bubble, and a bunch of
I'm not sure anybody who has a degree in economics ever does anything with it.
Yeah. So. Well, it was all,
they become economists.
Yeah. So, I'm glad I did it, because I think it gives me the ability to get inside the Keynesian mindset a lot better than the average person. But
absolutely,
what I had done reasonably well with the IPO and all that stuff. And, in 1998, I started cashing out, right? And so I had a pretty nice sized lump of money, but I'm now I don't know, I was probably a senior vice president at that point in time in this company. I'm busy. I'm traveling all over the world. I don't have time to manage this money. So I hire 3 wealth advisors to manage the money for me with one piece of direction: don't lose it. Because I had worked hard for it. I still had a lot of risk. I still have a ton of options, other stuff. So just don't lose this piece. I'm going to still take risk with this other piece, over here. Sure. And make a long story short, fast forward 10 years later, now I've left, right? And now I kind of need some of this money. And I'm kind of paying it. It goes, wait. You guys not only didn't grow it, you actually, in real dollars, you lost it. I'm negative. You fucking bastards. Wow. So I fire them all. And I had started casually reading in about 2002, 2003. I started reading about Austrian economics. So just kind of coincidentally. And then by 2008, they do this. I'm like, F you guys, and I'm taking it over myself, and I go in hard down this kind of alternative path of thinking about monetary systems and government relation to money and all this other stuff. But so getting back to the point, though, going back to being a public company, because I want to talk to you some about public companies and their space in Bitcoin and all that, but. Here's what I learned. So Gateway goes public in 1993. It's very exciting. We're we're listed, stock skyrockets. We're kind of the darling of the industry for a little while.
Yeah. You had the little cows on the side of the boxes. Yeah.
Yeah. Oh yeah. Yeah. And we're doing really, really well. And, we start having analyst days and things like that. So you were talking about the people who told you to stay away from Bitcoin, essentially, right?
Yeah.
So I start meeting the same people, but they're the analysts for the personal computing industry and Gateway and all that. And I start talking to these people. And I'm generalizing. They didn't know jack shit. They were terrible.
It's incredible, right?
There was kind of this moment because I had such respect for Wall Street and these big firms, and then I start meeting these people. And by the way, I have a really great education. I didn't go to Yale. I went to University of Wisconsin at Milwaukee.
That's a good school.
It is, but I mean, we'll be honest, right? I mean, it doesn't have the pedigree, right? And I did well, and there's a whole different story. I like to say that the physics book I learned in is the same one the guy at Yale or MIT learned at. So
that's exactly right.
So,
that's exactly right.
I mean, there are other advantages of those schools, and like I said, I don't want to be insulting to you, but there's a whole bunch of luster that came off for me.
I know. Look, I know you can get fantastic educations a lot of different places. You don't have to go to an Ivy League school.
Well, yeah, I'm not sure you have to go to college anymore for most things.
That's right. That's like absolutely 100% true right there. Yep.
Yeah. So anyway, this luster came off because I realized these people don't know. They're not really studying our business. They have something they want to happen.
Yeah.
And because there were other head scratchers that you might understand because you weren't exactly on the other side of the aisle, but you're kind of over there. Is like we would I would be, as an insider, I can't trade, right? So I have these little tiny windows every quarter when I can do whatever I want.
Yeah.
It actually wouldn't have mattered because even though I knew our financial results, I knew if we were announcing new products or layoffs or factory expansions, whatever. But my guess as to how the market would react to that news was the flip of a coin. Like things that I thought were terrible news, they would say, we laid off 2,000 people. By the way, you guys cut costs and you guys did this. And then,
exactly. It's all market expectations. Exactly.
Yeah. And so anyway, I lost a lot of respect, especially for those people, the analyst people. I mean, people like you that were investing real money and doing real things. I mean, fantastic. Go for it. Especially if you're successful.
Some of us.
Yeah, if you're successful, right? Yeah. I had some people, I don't think they were malicious, but they didn't do a good job. And
there's a lot of people there. There's a lot of people in my industry that just don't know what they're doing. There's 100%. There's no question about it.
Yeah.
But it's just, it's like that everywhere.
Yeah.
Yeah.
And, I think, let me ask you a question, because one of the things that I find, still having some connections into that is at least the seeming lack of interest in Bitcoin and the lack of knowledge about money and monetary systems, even themselves. Like I think if you ask them what they would do, they would say, "Oh, I manage money." That they would say they do that. Well, what is money? What's a monetary system?
Yeah.
They can't even define it. Like, and people make.
I think people in my business are hedge funds are typically they start, unless you're in a very there are some hedge funds who are quant funds who don't care really what's going on. They just have their quantitative models and they trade off of those. But for the most part, the big hedge funds that trade multiple strategies, and all, they understand the macro aspects of what's going on in the world. They absolutely do. And so, I would say that for some of the people who are managing money that are not institutional, I would say, generally there are plenty of them that don't understand really what's going on in the world macro wise. They don't understand the yield curve because they're only stock investors, or they don't understand convertible bonds because they only deal with mortgages, like they're definitely subsectors.
They get
and
so narrow, and then they can't.
yeah, definitely. And I mean, I was talking to my banker yesterday, not yesterday, a few days ago. I had to wire some money. And this kid, he's just a kid, and he's a banker. He's sitting there at Wells Fargo, and he's explained to me why he's paying off his mortgage. I was like, do you need to? He said, no, I just want to own my house outright. I don't want to have to make a monthly payment. I was like, dude, what? Like, why would you do that right now? Rates are going up. You've got a good rate on your mortgage. You have access. You have access to cheaper capital right now. Your dollars are getting cheaper as you go forward. Like, why would you do that? He had no idea. He was like, what do you mean? So, I mean, there are people in the industry, definitely. Why do okay? So go back to your question, and why is it taking so long for institutions to adopt Bitcoin? Well, there's a few things that are happening. First and foremost, they are in a system that has benefited them greatly. They do not need Bitcoin. They do not need digital securities in order to thrive. What they have done to date, and the system that they have been involved in, has been fantastic for them. You think Jamie Dimon wants Bitcoin? Hell no. Hell no. He doesn't want it. All right. Now, you've got some very intelligent, very large hedge fund managers of very large hedge funds that who are at the front end of this, the Ray Dalias of the world, because they understand that, hey, there are problems, there are systematic issues that we're seeing that I want to be ahead of the curve on, and I want to have insurance against that. And so they understand it. Now, go back to the regular institutional investors. I mean, the people, the portfolio managers who are in pension funds, endowments, nonprofit organizations that are managing billions, hundreds of billions, trillions of dollars, they don't have the mandate to do anything but what they're doing. So go back to what we're talking about: people being siloed in their little focuses of their investment focus, right? Well, they have mandates that are very strict. So they can only own bonds, government bonds. They can only own municipal bonds. They can only own corporate bonds, or they can own a mix of them, or they can only own a mix of 60-40 stocks, bonds, whatever it is. They, in their portfolios, they can only own small cap stocks. They can only, they don't have anybody who has the free, wheeling mandate to just say, oh, I'm going to throw some Bitcoin in there. Ain't going to happen. Like, that's just not going to happen at CalPERS or Texas teachers. Like, that's just not happening. So what do they have to go through, Bob, to get there? It's like they have to run a gauntlet to get there. So you have the portfolio manager has to understand it. Then he's got to get his, and so say he does understand it, he gets it, he really understands it. He's read the Bitcoin standard, he's read the price of tomorrow. He understands the proposition of this new hard money, and he understands how it can be a separate store of value asset. Okay, great. What does he have to do? He's got to get his chief investment officer to understand it. Then if he understands it, they've got to sit down in front of the whole investment committee for them to all understand it and to get on board and buy into it. Okay, even if once they get through that hurdle, which is weeks or months of meetings and discussions and papers and presentations and white papers and whiteboards and just nonsense that you can't believe. Okay, then they've got to get the compliance officer and the compliance committee to understand it. So the general counsel's got to get on board. Then they've got to get the compliance committee on board. Are we exercising our fiduciary duty? are we within our fiduciary duty? And can we add a mandate to do this? Can we adjust our mandate? Can we send out an addendum, or do we have to write a whole new, like, what do we have to do in order to be in compliance here? Okay, you get all of those people in. Then you've got to get your operations and back office involved with, okay, who's going to physically trade it? What exchange can we do this on? Go back to compliance. Is it in an exchange that can be in compliance with our standards? Who's going to hold it? Who's going to custody it? Because the institutions don't hold their own stocks in their back offices.
Sure.
They've got prime brokers who do it for them. Major banks. Okay, so who's going to custody that? Is it going to be multi-sig? Who's going to hold the keys? Like, how's that going to work?
Yeah.
Okay, how are they? Who's going to? What time are they going to market? Because you have to mark everything, mark to market every single day. Are you going to market it at the New York Stock Exchange close? Is it going to be London close? Is it going to be London midnight? Like, what time are you going to do it? Bitcoin never closes. So they've got to go through all of those things.
Yeah.
All of those things before they can purchase one Bitcoin. And it takes a long time. Now, I can tell you from the conversations I'm having, they are doing it. But the problem is that in the meantime, it has been adopted within all those hedge funds as the institutional investors and a lot of fast money who are using it as a risk on proxy, right?
Yeah.
So now we have this ETF that's a futures ETF that can be highly manipulated, or it can be used to manipulate the price of Bitcoin. They could just short that and short it and sit on it, sit on it, and sit on it, right? Sell this, buy it back, they just suppress the price. Okay. So the problem is that until we have regulatory clarity, okay, until we have a spot ETF, which would be helpful, and until we have some time where Bitcoin isn't going through the massive volatility it is now because it's tied to those risk assets. I mean, hedge funds are using this as a sloppy hedge, right? So it's got a higher beta sometimes than the NASDAQ. And so if they're long a lot of technology stocks and they don't want to just short Qs or something, they could short Bitcoin, they could short the futures, and they could use that as a leading edge, because Bitcoin's been, it leads risk on assets right now. It's been doing it for months. So if Bitcoin goes down, well, guess what? The market's going down. If Bitcoin goes up, well, the market's going up. It's been highly correlated, and it's been leading risk assets for a while, but mostly, not all the time, but mostly. So they're using it that way, and it's a little bit levered to it. So they're trading around it as they trade around their portfolios, and it's just producing a lot of noise. And so until we get past a couple of these steps and somebody comes in, one of these institutions comes in and says, we're going to treat it as a separate asset class. And you've heard Fidelity is allowing people to put it in their 401ks, or they're allowing people to put in portfolios, but they're not out there as asset managers actively putting it in portfolios themselves and adding to it. But you've got, Bob, five firms that control $30 trillion of wealth in this world. You've got BlackRock, Vanguard, you've got Fidelity, State Street, and Morgan Stanley. And those five, they control over $30 trillion of assets. When they start doing this, every single asset manager is going to jump on board and add it to their portfolios. And you don't start with like 0.1%. Like, you get a quarter, half, 1% as a starting point, and then you see where you're at, And if you just think about that, there's $700 trillion of assets in this world. $700 trillion of investment assets. That's not debt. That's that's investment bonds, sovereigns, and corporate debt that are on investors' sheets. Okay. Just 1% of that. That's of $700 trillion. That's $7 trillion. That's a $350,000 Bitcoin. So and when you get there, and you can get above that value pretty quickly, just because of what we call friction in trading, where you get the price of liquidity, and so as liquidity dries up, then you'll have these huge moves. Now that'll bring liquidity in, because people say, oh my God, the price is at $250,000. And so you'll find liquidity, but there's usually pockets of liquidity in these big price discovery moves. And so you'll see that. And they're not going to go in and say, well, it's trading at 71,000. I'm going to wait until it comes back to 62,000. No,
yeah,
they're going to say, I need a 0.5% position over the next 3 days. Go do it, and that's how it works. So that was a long answer to your question, but yeah.
No, it did. And I really appreciate you walking through that in detail, because I think for most people, actually you've illuminated a few things for me. And I think for, even people that are a little newer or less financially savvy, the difficulty of somebody in that position, like you said, maybe a California pension fund or something like that, of doing this. Because I think for most of us, at least even emotionally, go, why the hell aren't you doing it? Like, it's so freaking obvious. Go do it.
I keep telling you, it's your chance to front run the institutions. Like, they can't get to it as fast as you can. You can get online, get onto Coinbase or Binance or whatever you want, get it, put it in cold storage before they could ever even have the first meeting.
Right. And, there was, as you were talking about that, I had a bit of a flashback too, because, coming from a technology perspective, you see companies, my company was one of them. As a technology company, what you have to do to be successful is you have to continually reinvent yourself. Okay. And you have to get each reinvention correct. And so,
better than the last invention. Yeah.
Right. And no matter how good your current one is, if your next one sucks, you're dead. But even more importantly, there's a tendency for companies to reach a certain level. They get good at reinventing themselves early on. Then they hit a certain level. We'll talk about IPOs a little bit, but that's often a point where what happens is the organization culturally changes, the processes change, the regulations they have to adhere to change. And in a lot of cases, it's a death notice. It may be a long way away, but it's a death notice for it, because the ability to change gets harder, and the willingness to change gets harder, and the risk tolerance goes really low. Like nobody, and so there's a certain parallel to what you're talking about there. So I really like what you just said, which is to all the people out there, like, this is your chance to front run it. So it like in my world, you're each individual out there that goes and buys Bitcoin is like a new startup, and you're front running the old guard technology companies, and you're beating them to the punch. And
for the first time, think about it, back then when you were in technology, back in 1998 through 2000, we would do everything we could to get an allocation of an IPO of a technology company.
Yeah.
And, if you were a big fund back then, you could get 1,000 shares of something that might go up $200 like that. You can make $250,000 so quickly, right? Got 1,500 shares. It went up, $100. Wow. That's $150,000 you made in a matter of 10 seconds,
Right.
And if you were the little guy on the street, you got zero, nothing. You had no access to, which pissed a lot of people off, and it should have. It was wrong that all these guys were getting allocations and the little guy got nothing. Yeah. So unfair. What do they get? They got the opening price.
Right.
So you're getting, so this, like I'm telling you, like, you're getting the pre-IPO, that's when this thing IPOs, goes, it's gone.
Yeah, I think what we're talking about here, I actually, I listen to a lot of stuff. I don't think anybody's ever made this analogy before, and maybe you've heard
I
of
haven't
me,
heard it. Yeah.
but
Yeah.
but I think maybe we've just developed something I think pretty cool here, which is this thought of buying Bitcoin as, your opportunity to have pre-IPO, and it's phenomenal. And I remember that same stuff, by the way. In fact, I remember when I finally had enough money with some of the bigger brokerage houses, where I would get a little taste of some of those IPOs. You have to hit a certain net worth as an individual.
Sure. Yeah, of course.
And then you
but
might
not the little guy. Yeah.
Yeah. And in hindsight, it's kind of funny because I want to talk about some ethics and ethos stuff with you. In hindsight, I get a little bit of guilt almost. That's too strong of a word, frankly, about that, because I realize now, the Cantillon, I think it's, people often say the Cantillon, but I think it's actually pronounced Cantillon effect. What we're talking about is really that. It's a version of that, and it's basically the people closest to the money, in this case, the closest.
They benefit. Yeah.
They benefit, and the small guy gets it later. And there's probably nothing better than I got the pre-IPO stuff at $2 a share, and you got the opening price at $8. And I sold mine at $9, and you sold yours at $6 the next day when it dropped.
Exactly.
Like I mean, that's just the way the world is.
Yeah, exactly.
And so one of the things, I'm not sure how much James, but I run Barefoot Mining, and we've been in the mining business for 5 years. We're not a massive company, but I have been approached a couple times already about going public, and my answer is no, I will not. Don't even talk to me at this point. Now, at some point, maybe somebody like yourself could tell me, no, Bob, you're making a mistake. And one thing I'll say is I've learned I make mistakes and I'm wrong sometimes. So if somebody corrects me, but I'll tell you, it'd take a hell of an argument to convince me that I shouldn't IPO. And the reason is I believe that it would change the culture and behavior of my company in a way that, one, I don't even in a fiat world, I don't want to be beholden to what it takes being a public company, but even more so,
the regulations, all the paperwork, it's $2 to $3 million a year of costs just to keep up with being a public company. Yeah.
So that's point number one. Point number two, which I think is honestly even more important, is it changes the ethos of the company. So you have to operate on 90-day cycles. You have to, it's the measurement of your business in fiat that's important. My measurement is how much Bitcoin I'm making. That's what I care about. How much Bitcoin am I making, and how much am I producing for my investors and my partners, and all that. That's all I care about. How much Bitcoin am I making? And public companies have to live in 90-day cycles, and I'll give you a simple.
They've got reporting. They've got to.
It's fiat.
Live up to expectations of analysts, and
and so I'll give you an example. When Gateway was private, and it was one of the last larger PC companies to go public, what would happen is, let's say Intel, it's toward the end of, let's say, the fourth quarter. Okay, we're 10 days from the end of the fourth quarter. Let's say Gateway's sitting on 300 million in cash, and Intel, we're private, right? Intel calls up and says, hey, how would you like to buy the next 4 months of processors at a 20% discount? But in order to do it, you gotta drain your cash to zero, right? You're gonna have bloated inventory, but we're gonna make a shitload of money because we bought these processors at a huge discount.
But you can't do it.
But if you're private, you can. If you're public, you can't.
Right.
And so that's just one example. And that changed. That was a cultural process, philosophical change that we saw at Gateway. And
it was a financial engineering change. Like you had to abide by certain rules. Now, why? Well, the decisions are no longer made by a handful of founders or key employees.
Yeah.
They're now made by a board of directors that are answering to the shareholders. And people get pissed off. They're like, why should they answer the shareholders? Well, the shareholders own the company, period.
Yeah.
They own the company. Then the shareholders get pissed off and they say, well, why aren't they listening to us? And the answer is, well, because the company took out this massive debt that they've got to worry about that first. And they're beholden to the debt first, then you guys. Yes, you own them, but you'll own nothing if they don't deal with that. So, so it just becomes a whole different world, and so, it's.
And so for me, I've been, maybe critical is too strong of a word. I don't know, maybe it isn't too strong a word, but I've been, I think as an industry, the mining companies especially, and I don't view them necessarily as my competitors. It's a strange market because we're not technically competitors, but I worry about them. And I'm very curious about your perspective, because I look at them and say, well, we have about 50% of the world's hash rate, maybe a little more, that's now controlled by public mining companies.
Yeah.
They're hodling Bitcoin, and they often promote that as a very proud point.
Yeah.
And I worry about it. I worry about it.
You worry about one of them goes upside down, has to dump Bitcoin. Yeah. Well, they're dumping it. They're dumping it now. You can see there's a lot of net outflows this last month. So, and I'm not worried about it. It is something to just keep an eye on, but I'm not worried about it. If Bitcoin flounders around and goes down to like $3,000, that would be problematic for everybody.
Yeah.
And you'd have a couple of public miners that would have major problem.
Yeah.
So, but the hodling doesn't worry me as much, especially because if they haven't, as I understand, most of them are healthy enough that it has not even become close to a problem yet. Yeah. So they're still creating Bitcoin at a profit here in fiat terms, so they could create it and sell it and still be profitable. So
maybe let me expand on my point a little bit. Again, I'm an old guy coming from a couple decades in the technology industry. I wish no ill on anybody. I want to be really clear. I wish no ill on anybody. Over the course of the next 5 years, somebody's going to fail. Probably multiples. Multiples.
Yeah.
Look at any of the technology industry folks. Obviously, the personal computer industry being a postcard, the TV industry, cell phone manufacturers, all that. Companies that don't adapt, they make one strategic decision, get overextended, over leveraged. They could be subject to, if the stock market doesn't respond properly to them. In other words, their balance sheet starts to look appealing to a corporate raider. I mean, there's all kinds of things, and I would say, give it enough time.
I would actually use the analogy. They're a lot like oil and gas drillers, with the kind of the heavy capex upfront expenditure to start realizing profits on the back end. And so the problem is sometimes you have a ton of capex upfront. You've taken on a lot of debt in order to build out that infrastructure to drill these holes. And then oil drops out of bed and you're suddenly sitting on negative cash flow for many years. And a lot of companies go under that way. Well, some of the smaller miners are definitely experiencing that right now, because they loaded up on ASICs when Bitcoin had dipped down to 40, thinking this is a great deal. And now they're upside down because they're way ahead of themselves on the risk curve. So, and That's what I would liken it to, probably more along those lines.
Okay, I think that's a fair statement. Uh, like I said, though, the thing that worries me ultimately is that, I mean, there's no industry where all of the early pioneering companies that got big initially lived and stayed. I mean, they just, shit happens, right? And so so what happens, like, they, like, as people have talked to me about going public, they say, well, Bob, you could raise a bunch of capital, you could then, you don't have to bring in investors, you don't have to go scrape and claw for debt, which is hard for me to get. Typically it's hard for a smaller private mining company to get debt. Well, for reasons we won't rehash, I just don't want to go there. Now, what it means is sometimes I have to double down. So, like, I can say this to you, and so, like, as a company, we have zero debt, zero.
That's great. Yeah.
Now, in order to be in that position, what I've had to do is, over the last few years, we've generated some Bitcoin, and we've had to sell Bitcoin to finance growth. And we've chosen that strategically because we're beholden to nobody, and we do that. Could we have grown faster? Could we have used other people's money in a different way? And there's different philosophical.
Yeah, if you had taken on debt, for sure.
Yeah. So it makes me sleep a little better as we go through like these periods than
but you're the owner, you're the founder, so it's your, if you were a public company, you would have debt.
Yeah.
The shareholders would demand that you lever up the balance sheet.
Right.
That's what it is.
Yeah. So the other thing I was going to say is, I think I'd really like your perspective on this. So in the end, so we talked about big public companies, by the way, not just miners. It can be a MicroStrategy or Tesla or anybody. Where is the Bitcoin best held, and does it even matter? So, in other words, if you're a public mining company and you have 100,000 Bitcoin on your balance sheet, the stock price, as represented in fiat, is kind of a bit of a proxy for that. But the people that own the shares in the company really don't own any Bitcoin, right? So, for me, again, I'm spouting my own philosophy to a certain degree here, but what I try to do with my investors is I get them Bitcoin, like, and I get them it every single day. Like, if you own part of my company, or one of the companies that we form, several companies actually under an umbrella, but if you own 10% of that company, well, you're getting 10% of the net every single day, because I actually don't want to hold it. I don't want to be responsible for it. And I want you, you decide if it should be sold or not. You decide if you want to leverage it.
Right. So you're asking, so for the shareholders, should they have say in that? I mean,
I guess,
they could. I mean,
they could. Yeah, go ahead. Sorry.
No, I mean, they could, an activist could come in and force that, for sure. It would take an activist shareholder to do it, or consortium of shareholders to go to the board. But I mean, we've had conversations with public companies before and swayed them to do something that they hadn't thought of, maybe, and thought, oh yeah, that is a good idea, or whatever. The way you're looking at it, we understand that, and not just because it's benefit for us, but because it's benefit for all the shareholders. And sometimes companies need a little bit of a nudge, but that may not be what was your full question, though?
Well, really, in the end, is the Bitcoin ecosystem better off, or is it completely indifferent whether they're hodled? In your opinion, doesn't matter.
I don't think it matters.
Okay.
I don't think it matters. The Bitcoin will find liquidity, and I'm the things we're seeing today with the Luna and the Celsius issues, and those are big things that Bitcoin winds up getting in the crosshairs of these over levered balance sheets that wipe out billions of dollars worth of balance sheet holdings. And that's something to me that, yeah, that's the thing that's going to really push this thing around. But for the holders now, I don't see that being an issue. I just don't.
Okay.
I also, because it just presents an opportunity for other treasuries to buy. So I would think that as we settle down here and as we see risk assets kind of come back into onto the table for investors, I would expect that some treasuries would start adding in here 20, 25,000, 30,000 as the price recovers, we get some stability and they feel like they're getting it on sale, yet it's a little bit more stable. I would expect that. And so you'll find liquidity that way too. So
yeah, I think liquidity, maybe get to a little Bitcoin specific thing, I think is a very interesting thing in that, like, I'll ask you this question maybe to start with. So when you look, let's say you own 21 Bitcoin. Do you look at that as I own one millionth of all the Bitcoin? Or do you look at it as there's about 19.1 million in circulation now? I own whatever that percentage would be. I own. So I guess what I'm asking is, we've had the first time in history, this whole concept of absolute scarcity and knowing what the final money supply is. So I'm curious, especially from your mind, like, how do you look at it? I mean, we have a delta of about 10% in the money supply between where we are and where we will be. Do you use the 21 million typically to evaluate things by, or do you do it more in present terms?
No, I actually think about it more in terms of we've lost millions of coins. There are some wallets that have not been active since 2010 or 2009. So I kind of discount it, but I don't really worry about that as much as like when you do calculations out. When I do my calculations out, I still use the 21 million, just assuming that every single Bitcoin will be found or discovered or whatever. They won't. We know that, but it makes it as conservative as it can be. And being a risk manager, I stay on the conservative side. So that's one. Oh, answer.
I like that thought. Yeah, I think that I do the same thing. I think of 21 million, in
my head, I know that there's a lot fewer that are actually in circulation. But when I do my calculations on forward thinking, I still use the full 21 number. And, and as far as myself, I just think of it as terms of, I still think of it in dollar terms because all my other assets are denominated in dollars. Yes. So what percentage of my net worth is in Bitcoin? I'm still thinking of it that way. You know? So,
that's that thought process is a hard one. I sometimes, we sometimes say, money is almost a language, and you learn a certain language, and so dollars is our native tongue, I think is a way to say it.
And it'll take a while to
and I'm trying, I look at I don't know, this TV behind me, and I try to say how many sats do I think that's worth. I try, I practice. I'm getting better. I know I've been kind of in this world for 5 years, and I'm getting a little better at it. But like my wife, she speaks 4 languages fluently, wow. and it was interesting too. I just interested. Like once you learn a second language, because do you only speak English like me?
I speak a little bit of French. Yeah,
a little French. Okay, enough, right up there. But
enough to get myself in trouble in Paris. Yeah.
But there's been a lot of studies about that. Like the third language, the fourth language, the fifth language, those are a lot easier. The second one is the hard one. And like my wife, right about the time we met, she's from the Philippines originally, and she had moved to Macau to work as a Red Cross nurse.
Wow.
And as she's there, she speaks these 4 languages, but one of them is not Chinese. So they tell her, hey, you have to be the backup receptionist. In addition to being a nurse, you're the backup receptionist. I don't speak Chinese. Well, you'll figure it out. And you know what? 90 days later, she was conversational in Chinese from
Wow.
zero. But, there's no chance I could have done it. But her going from language 4 to language 5,
No big deal.
her brain
Yeah.
can do it. So
0% probability I could do it. Yeah.
yeah. Oh, me too. Me too. Absolutely zero. Excuse me. Yeah, absolutely zero. So, actually, interestingly, so talking a little global there, I did want to talk to you about a few global things, and we can tie them back to Bitcoin or not. But you've talked about the Japan situation a little bit, on Twitter, and what's going on there. I have an interesting perspective on Japan as well, but I maybe just for people that aren't as up to speed, talk about Japan a little bit and what's happening there through your eyes.
Yeah. So, I mean, Japan right now is the Bank of Japan, BOJ, has instituted a policy they're doing yield curve control, where they're looking at the yield curve, the yields of all their government bonds plotted out on a chart, and that curve, they're controlling it by buying bonds. So they've said that they want to keep their 10-year treasury at 0.25%, 25 basis points yield. And they will buy unlimited amount of government bonds. Yeah, there it is. That's today's post. Yeah. They will buy an unlimited amount of government bonds in order to keep that yield at 25%. So, and in this chart, you can see that they own $500 billion yen worth of their own assets, and that actually comes out to be that's of the Bank of Japan holdings, JGB holdings, that ends up being half of their float of the number of JGB bonds that are out there. And so the problem is that they're standing there and buying this, right? They're buying these bonds, and you have to think about it in terms of interest rate parity. And so right now the US dollar is strong. It's getting stronger because our interest rates are going up, and other currencies are debasing a little bit quicker than we are. Okay, so there's a debate about euro dollars, the whole euro dollar system. But if you just think of it in terms of, there has to be a parity between, if I own something that's denominated in yen, that's getting a certain percentage, versus something that's denominated in dollars, it's getting another percentage. Well, there's a parity there. And so the FX rates will trade around on that parity. Okay, so why does this matter? Well, the problem is, so as the Bank of Japan is buying these bonds, okay, the people don't want to be denominated in yen. They don't want to own this debt. And so they'll give them yen for those bonds, and then they'll immediately turn around and sell them for dollars or other currencies, but most likely dollars. And so there's pressure that builds up there, and the release valve is the yen. And so you've seen the yen make this just incredible move, breathtaking move in the last few months of 30%. And it's been crazy. And so the problem is, at some point the yen just explodes through a certain level that, they're a net importer. I'm sorry, they're a net exporter. And so it's good. Apologies. It's good for the yen to be a little bit weaker against other currencies. But when you talk to, and they've done surveys within Japan recently, and the surveys they're doing with their business surveys are saying that no, the stronger yen has been hurting them. So it's interesting to know that even though they're a net exporter, it's been hurting them, and it's going to continue to hurt them. And so, but the long and short of it is, the yen is is getting destabilized, and you're seeing it just you're seeing it explode, meaning the chart is going up because it's quoted in terms of against dollars. So
Yep.
135 yen versus 140 yen, 150 yen per dollar. That means the yen's getting weaker.
Yeah.
And so it's a little bit confusing, but as the yen goes up, it's getting weaker. And so, and
Yes.
it's going to eventually become a problem. They're going to have to make a decision. Do they keep defending their 25 basis point yield and buying these bonds? And that yield curve control that they're using right now is effectively quantitative easing, while the rest of the world is starting to quantitatively tighten. We'll put Europe over here, because now they're talking about doing something, that they're talking about fractional tools to battle yield curves in different countries that are not as strong financially than other countries, like the southern countries, Portugal, Italy, Greece, like Spain, like their balance sheets are not as strong, and so their yields are going up. And so the central bank, the European Central Bank, is saying that they'll step in to support them and they'll buy bonds, which is just continuing quantitative easing in those areas. And at some point, somebody's gonna have to pay for that, whether it's Germany or something collapses. The currency can't continue on like that, with part of the union benefiting at the expense of the other part. It just can't continue like that. So you're seeing this happen. That's not happening yet, but we're right there. They just had this emergency meeting to talk about, and they said, we have the tools, we will help. But back to Japan, at some point, it just breaks. Like it just can't continue on this forever. Yeah, it's been going on for 30 years, but at some point it decouples from the rest of the world, and you just enter a hyperinflation phase. And and so the stock market's going up and everything's good. And we've seen it happen in other markets that wind up having hyperinflation. The market's great in Venezuela, just all the way up until it's not. And then you get a price for your coffee. You have your coffee and you want to get a dessert, and it's a different price because it's on a chalkboard.
You've been there too long. Yeah. I have a great affinity for Japan, and I appreciate you going through that detail there. I started traveling to Japan in the early 90s, maybe even 89.
Technology.
So over 30 years ago. I've been over 70 trips. I don't know how many.
Wow.
Something on that order. And I distinctly remember in the early 90s, interestingly, the exchange rate was 135 yen to the dollar.
Yeah, I mean, exactly. And it came all the way back down.
Yeah.
And then it got
Yeah. By the late 90s, mid to late 90s, it was like 80. Like it was a massive strengthening. And it had the effect that you talked about of moving literally me and my activities, which was a microcosm of the bigger things, from looking to Japan primarily for personal computer components and manufacturing, to Taiwan and Korea, and then ultimately China. And, a rapid change, by the way, like from almost everything in the industry being built in Japan between, let's say, 1990 and 94, to by the end of the decade, nothing being built in Japan. It had that effect. And I remember, again, being an economist, one of the things I learned, having traveled a tremendous amount internationally, was I had my own version of what I now know as the Big Mac Index. Are you familiar with the Big Mac Index?
No.
Okay.
Oh yeah, where it is on the yes.
So
where it's priced in the world. Yeah.
And I used to use a can of Coke, but it was the same concept. Just saying, like, hey, if I'm an American and in America, I walk into a 7-Eleven and a Coke is $1.
Correct. Yeah.
If I go to Japan and the equivalent is $1.30, well, then the yen is weak. And if it's 80 cents, well, then it's or vice versa.
It's,
And it's really strong.
flipped. Yeah, it's strong.
Yeah,
Yeah,
then
flip
it's the
it.
other way around.
Same
But
thing. And I did in the
yeah,
UK. It's for I went back and forth to the UK a lot. So yeah,
yeah,
same exact thing.
yeah. And so,
Yeah.
the magazine, The Economist, has been tracking what they call the Big Mac Index now for I think like 4 decades. It's
Yeah.
very interesting, and it's a pretty good estimate because you have cost of transportation, you have the material costs, you have labor costs, you have cost of facility, all those sort of things are kind of built into each of those products. They're simple products and they're exactly the same wherever you go in the world. That's the cool thing about it. So you're truly making a apples to apples comparison.
Yeah.
I think one of the most important things for Bitcoiners, and I do a lot of public speaking and podcasts and things like you do too, is I'll often say the most important thing you can do in understanding Bitcoin and the long-term implications of Bitcoin is to step away from where you are, assuming that somebody in a Western first world country, and go put yourself in Sri Lanka, go put yourself in Venezuela, go put yourself, my wife's from the Philippines, you go spend some time in those places and look at your relationship to money, look at your relationship to the banking system, look at your property rights, and now say, how do you feel about Bitcoin? And we have, I'm going to throw another thing up here, and you feel free to comment on any of these. But if you look at what's going on in the world, we have. I'll talk about that one maybe later. Let's look at this one. If we look at this, we have, since the first of the year, Sri Lanka Central Bank insolvent. Lebanon, the head of the central bank is now running for his life.
It didn't come up. I don't see it, but
I'm sorry.
No, it's okay.
Let me.
But if you want to see it for your viewers.
Yes, thank you. Appreciate it. So for viewers, let's try one more time. And how about that?
Yep.
So so if we look at this, Turkey and Argentina back again, like how many times can your currency fail? You start looking at the things that are happening in the world, through the eyes of these different people. And the case for Bitcoin is, I think, very different than a typical.
Yeah, I mean, it's enabled people to get their money out of Venezuela. It's enabled people to get their money out of Lebanon. It's enabled people to get their money out of Ukraine. I don't know how effective it's been in Turkey, but it's been effective in these places where, look, if your currencies, if the value of your currency is moving at 10, 15, 20% a month, and you move it and it could be seized, it could be possessed, it could, it could be bought in by the bank like they did in Greece back when, not recently for your viewers. This is back when Greece was going to insolvency. The citizens don't care that it's volatile. To your point, it's giving them freedom. They can transport it very easily. And if they know their 12 or 24 word seed phrase in their head, they can take that anywhere. And they can't steal. It can't be seized by border agents if you're carrying gold, for instance. You just walk. You come across and you get across that border. You've got, it's in your head. So what do you care if there's volatility? You don't. I mean, that's the risk. I would rather take the risk of volatility than the risk of seizure or total loss at the hands of the government or bad actors every day. So it's a no-brainer, absolutely no-brainer. And so we get these arguments. The people get on these threads and they argue, but the volatility, it's not a good store of value. It's like, God, you don't understand, man. Are you sitting there in Venezuela? And so, it's the El Sultan Bitcoin is a guy that I met in and I've talked about this before in the Bitcoin conference. Great guy. And he's like, it saved my family, saved our family. I was able to move our wealth into Bitcoin. We got out. And if I didn't have it, we would have lost everything. So.
Yeah. And I think I have I'll give a 30-second version. I have this analogy I give to people sometimes, and I'll say, let's just say hypothetically, you're a coffee farmer in Colombia running a successful coffee farming business. And somebody comes to you and says, I want to buy your business for $1 million. Now, if that happens and you say, thank you, I'm going to do it.
Yeah.
What are you going to do with $1 million? You're going to go rush down to a Colombian bank and put it in there.
You buy real estate.
You're going to buy real estate in Colombia.
You buy gold.
Yeah, you're going to buy gold.
Can you even get it? Yeah.
Right.
Yeah.
And you know what happens today? I'm going to throw up another chart. I think what happens today is that guy, most likely occurrence is he's getting on an airplane, he's flying to Miami. He might go buy a little condo or a little house in Miami. He goes, sits down with a US broker. Maybe he buys some US securities, some treasury products, something like that. For those of you who are just listening, I'm showing a chart here, which showed the last one I could get out of the Federal Reserve Board, that at the end of, in April of 2020, there was $20 trillion of foreign owned US securities.
Yeah.
And so, I mean, that's what you do, right? And there's a longer discussion about property rights and all that. But if you're that Colombian guy, that's the reason you do something like that. And Bitcoin, for the first time, maybe becomes at least part of that solution. Maybe ultimately the whole solution. Like, hey, I'm never even going to leave Colombia and go do something else. But and there are countries all over. Of the 180 some countries in the world, there are probably 140 where that's the mindset of somebody that comes into some wealth is, I gotta go get it in one of these other, most likely the US, but maybe in some of the European countries, as well. So so I think this is a big deal. I think the world, this isn't my words, but the world changing from the bottom up, and that is the bottom, and we won't go into it today, but there's all the unbanked and all the wealth in these other places, and Bitcoin is just a logical place for it to flow.
Well, and that's it, and that hits on the point of, honestly, the point of the whole conversation is that's why we have a passion for this, Bob. We have a passion for this because we know it can help change the world. I've seen how much damage the old system's done. I've been part of that system. I'm no longer part of that system, but I can see how we can help the world, not just Americans get rich, but people who actually need an escape valve.
Yep.
They need something to give them liquidity to get out of the situation they're in, or to save them from hyperinflation, to save them from government seizure. Like, they need it. And it's only right for us to put our energy and our minds. That's why you're in your late 50s. I'm in my early 50s, and we're doing this because we have a passion for it. And that's why we're here. And I will spend the rest of my career doing this. Unless something happens where it just gets banned everywhere and it goes away, which is a non-zero chance, but so close to zero in my mind. I'm putting all my energy in this. This is where the world's headed, and we need to be here to help them. So
well, amen to that, brother. And I echo it exactly. I think about, I have a new granddaughter. Actually, I have 5 grandkids now, 3 of them under the age of 1, and I plan to be here for a long time still, but at some point I won't. And I want the world that's left for them to be fair and equitable,
or at least just a little bit more fair and equitable than it is now. It's going the wrong direction. Let's steer it back in the right direction.
And it's the least to the degree I've had success, or I may have influence in the future, I have to at least try. Right. And so,
absolutely,
you and I spending time together late on a Friday, probably a whole bunch of people having adult cocktails somewhere, but
it's all it's time.
We're talking Bitcoin and fixing the money, and I just think it's imperative. And I don't want to take too much more of your time, James, but I want to close. I've been doing something in some of my public speaking. It's a little game I play. So I want to maybe finish with a game.
Let's do it.
And so the game, I'm going to reshare my screen. The game, which I'll introduce to you and to the audience, is called "Are They Corrupt or Incompetent?"
Oh God. Yes. The answer is yes.
And so I'm gonna I'm gonna bring this up, and we'll just talk about a couple people, and I'll just let you comment. And you don't have to say anything, but I think you'll find it fun, and a good way to maybe work into the weekend. So we'll start with a little video clip from about a year ago from Christine Lagarde, the head of the European Central Bank, commenting on Bitcoin. So a little video clip here for everybody.
It's for those who had assumed that it might turn into a currency, terribly sorry, but this is an asset and it's a highly speculative asset, which has conducted some funny business and some interesting and totally reprehensible money laundering activity. I think that there are criminal investigations that have taken place that I'm sure will continue to take place that demonstrate it very clearly. And there has to be regulations, and this has to be applied and agreed upon. It's a matter that.
So I'll leave that one there. So our friend Christine Lagarde, thoughts about her comments.
So look, she's one of the old guard. She's been at this for a very long time, and she's benefited from the system she's in, and she's fighting to keep hold of that system and make sure that system wins. It's just she's rewarded in this system. She has no standing and no reward in the new system. So that's all it is. She's acting in the best interest of the system that has benefited her, period. I have no idea who she is as a person, but that's all I see. That's all I can see is that, yep, she's acting in the benefit to the system she's in, period.
Yeah, I agree with you there. I could have selected, by the way, any of probably 50 little video clips here. I've got a whole library.
Oh yeah,
Christine
I mean, she's got a great one of it. It just will. It will in due time. In due time.
Yeah.
It's ridiculous.
And then when pressed, she basically says the same thing.
I mean,
yeah. So okay. So next one, I'm gonna show two slides here. The first is a tweet from our current president.
Yeah.
The tweet says, "You want to bring down inflation? Let's make sure the wealthiest corporations pay their fair share." That was from May. And then let's follow it up. We'll do them together. A little video clip from I think it's Karine Jean-Pierre, who is the new White House press secretary, who says, as you will hear now,
is that the economy is in a better place than it has been historically. And so we feel here at this administration and other experts as well, is that we feel that we are in a good position to take on inflation. We are in a good position to really start really working on lowering prices.
So we'll just kind of take the administration as a
those two. Like again, they're what you look at what the incentives are. The incentive for them is to get reelected, period. That's all they care about. Do they really? That's all they care about is to get reelected. They are singular in their focus of that. They want to be reelected. And so they're going to say anything they can and posture any way they can to make it look like they're doing a great job in order to get reelected, because they know that they're going to get most of, if not all of, the Democratic vote, and they're not going to get the Republican vote, but there's this huge mix in the middle that's undecided, and they've got to convince that undecided vote that they are doing a good job and they're on top of this and they're doing as well as anybody could.
Yeah.
That's it. Period. Again, it's incentives. Do I think that they're incompetent or they're, they're corrupt?
Yeah.
It doesn't,
Yeah.
I don't even know. I just think
Yeah.
that their incentive is do this. That's it. So
Yeah. Well, I'm not asking you to necessarily answer it directly that way. If you want to, you
they want to
can.
get, they
But-
want
but
to
I
get
agree with
reelected.
you.
Period.
Yeah.
They want to get reelected.
The one thing I will say, though, is that there's a common theme between Christine Lagarde, maybe the administrative folk, the people in the administration, or even, let's say, a Jerome Powell, is I think they try to project this ability to be in control. And I would really love honesty and say, you know what, we're trying to drive.
That's gone.
Yeah.
Those days are gone. That's
Yeah.
it's not going to happen. It's not going to happen. And again, I, as far as politics are concerned, it doesn't matter. Republicans, Democrats, it doesn't matter.
I agree.
It's all a game. It's like, I don't even see that. Look, after they have these votes, these really like heated discussions in the chambers, what do you think they're doing afterwards? They're high-fiving, having cocktails, because it's like in hockey, and and when you were an athlete later on, in hockey, we would beat each other up, get in fights, just be at each other's throats.
Yeah.
After the game, we were down at the pub having beers together. I mean, because you're all in the same game, Yeah, you're on separate teams, but you're in the same game. It's the same exact thing.
Yeah.
So they're just politicians.
Well, let's go to a different guy
This
outside of politics, and
This is great.
quote from Warren
Yeah.
Buffett.
Now, if you told me you owned all of the Bitcoin in the world and you offered it to me for $25, I wouldn't take it, because what would I do with it?
So, so Mr. Buffett, thoughts?
Yeah. Well, that goes back to talk about somebody who's benefited from the system. I mean, he's the last person in the world who wants to see dollars taken away, is that guy. He doesn't want to see anything denominated in anything but dollars, because his entire life has been built on the inflation of assets in dollars. I mean, the ultimate stock investor. So come on.
Yeah. I think what's hard about him is obviously we're not in any of these people's minds, so we really don't know their intent. But, to a certain degree, again, I can say pretty clearly, I'm quite confident he hasn't studied Bitcoin. And, he's seen enough to know there's some threat, there's something that, as you said, threatens this thing that has been successful for him. My objection to him saying anything about it, though, is, coming from this position where he's respected by millions and millions of people who want to mimic and follow him. And he's just taking them off this path. And I think, I know you're involved in Bitcoin education. Maybe we can talk a little. Yeah. We can close with maybe you talk a little bit about some of that stuff.
Yeah.
I mean, that's why you and I are doing this tonight, though, to a certain degree, is, but the amount of re-educating we're going to have to do to pull somebody back who believes that Warren Buffett said this about Bitcoin,
Warren Buffett is not going to teach anybody who's under 30 years old anything. Nobody's listening to Warren Buffett. If you're under 40, you're probably not listening to him, so his generation is a bunch of, look, they look like us, and they're on Wall Street, and they again, the education is important. And it is. And that's why, and I'm involved in the Looking Glass education. And you can find the link to that in my bio. And I got pulled into that by Greg Foss and by Jason Sansoni. And these guys, we've got a group of people who have built this up. And it's Greg is kind of like the old guy mentor-ish. He's there doing he's doing the deep dives and some articles there, and that's kind of what I'm doing. But the guys who really built it are this guy Seb Bunny, and Daz Bia, and Jason Sansoni. Those guys, and Max Club Music on Twitter. Those guys really built it. And now Dahlia Platt is there. She's Spanish speaking, very smart educator. She's there and helping shape this. But what it is it's a course on the front end, and when you get there, it's kind of a course you can take, and it's all about money. It teaches you about money, and the history of money, the uses of money, the challenges of money, the challenges of government intervention and manipulation, and all that stuff. And it's not about, hey, how is Bitcoin better money? It's about what is money, and gets you, it takes you down the rabbit hole. And eventually it's obvious why Bitcoin's the answer. Okay. But it's set up in modules. You can do it all in one sitting if you want. It take a long time, but and they're not very long, but they're enough that you can really dig into them, and you can kind of click in further to get more information about certain parts of the module. But as you go through, it checks it off. And it's just like taking a college course. And then when you're done, you can dive into some of the other stuff. There's podcasts, there's videos, the best videos that Greg's done, some of the videos that we've done. We had a video with a podcast with Preston Pish that was great. And then my articles are on there as well from my newsletter, which are the Informationist is my newsletter. And that's where I take one complicated financial concept, and every single week I boil it down into simple terms and super easy to understand language for anybody. So somebody like you, who's super smart, been in technology forever, may not know some of these things about yield curve or repo markets, and you've been wondering, and you don't have time, just go dig around and kind of figure out what does it all mean. It's all laid out there for you in really simple language. And that's been great too. So, but we have a passion for helping teach people, and Greg is one of the most generous people I've ever met, and he's generous with his time, his money, and he's there helping out. But the guys who are really driving the day-to-day are like Seb and Daz and Jason and Dahlia and Max. Those guys are really pushing it forward. The young guys are really pushing it. So it's been great.
Well, it's outstanding. I've spent a little time there. And by the way, for those listening, all of James' information, his Twitter handle, the link to his newsletter, the link to Looking Glass, all that stuff will be in the show notes. So I highly encourage you to do that. Not only do it yourself, but spread it. I'm as James said, for me and for him, we're in the second half of the run, let's just say, and we've had some good fortune. We're here to make the world a better place, and this is what we believe in. But we can't do it without without education. And we evangelize and we educate. And for those of you that have listened all the way to the end here, thank you for sticking with us. James, thank you for all your generous time, and
thank you for having me.
Yeah, thanks so much for being the initial guest on this podcast. And as I said, all the information will be in the show notes. Please check that out. And James, thank you again.
Yeah, thank you, Bob. And I appreciate you having me on, and we'll talk next time.
Peace. What a pleasure it was to spend a few hours with James. James and I have very different career paths, but I find it fascinating that we reach the same basic conclusion, that Bitcoin is crucial to the creation of a fair and free world. And now we both violently agree that the opportunity for anyone in the world to buy Bitcoin in essentially any quantity at depressed prices is essentially the revenge of the pleb. For decades, only an exclusive class of people and organizations have had access to pre-IPO equities, and the average Joe was always just late to the party. Now with Bitcoin, those positions have been completely reversed. So carpe diem, folks. James is a must follow on Twitter, and you can find him at James Lavish. His newsletter is a gem, and it can be found on Substack. And also, James is part of a wonderful group working on Bitcoin education. Please check out their fabulous work at lookingglasseducation.com. Mind Your Business is brought to you by Barefoot Mining, and if you'd like to support this show, donations to the Lightning wallet listed in the show notes would be greatly appreciated. The music in the intro and outro of this show is from a song called Flight by my friend and fellow Bitcoiner, Jordan Kritz. Please check him out on Spotify, iTunes, or your favorite music platform. Finally, thanks to you for spending your time with me and James on this first episode of Mind Your Business. This show is recorded on June 17th, 2022, and nothing within it should be construed as legal, tax, or financial advice.